All right, what is up, YouTube? I'm back once again. We're gonna roughly talk about, somewhat what to expect for earnings and already, what you've seen for companies that have reported so far. So let's go ahead and dive right into it. Let's check out the portfolio that we do have. So, oh, hold on. This is one of the advantages of having TD Ameritrade Thinkorswim. The platform, like once it opens up, you have the ability to watch the news right here. You're able to open it up and close this. I would say close the site out, and you're still able to view, the trading news. So you're able to look at all the earning calls that are coming up. We see American Express, and it's pretty much that simple. Today is the 19th. So we have, let's see, it was just on here. Okay, so we can look at it right here. I'm not familiar with some of these companies off the symbols, but I know I've seen American Express. We have a lot of companies reporting today alone. We have United Airlines, and I'm pretty sure they reported in the morning, like it said. Let's see, American Airlines, right here, American Express, and we have Hawk. If you're not familiar with that company, go ahead and take a Google at that. Um, the list just keeps going on and on. That's just a lot of companies that are reported, but we definitely focus on the big blue chip companies, the ones that are actually stocks that actually matter. To be honest here, so we can already eliminate this, eliminate that, eliminate the splits, eliminate ETF dividend, eliminate this, and we can eliminate that, and it definitely narrows it down to what we're looking at here on this calendar. Um, we're not paying just the conference call. So who's reporting today? The list definitely goes on and on and on. Okay. So earnings and the conference call. There's just a lot of people reporting earnings, honestly. So what what we've seen from Netflix is that they were able to grow subscribers. There's a lot of subscribers, so people were worried about Netflix growth. Also, the problem with the cash flow of Netflix, and people, were very concerned about that. So all those concerns, all those negative doubts, when you have such a negative doubt on the company, when the company reports a blowout quarter like this is exactly what you're going to see. We see 150, 157 the daily moving average, but we see the company, going into earnings, it kind of fell down, but the 143 was definitely the low. Remember, Nasdaq did have their falling day where all the tech stocks did fall down, and right here we see them, recover. But we see the Netflix is definitely bouncing higher because of what happened with their earnings. Definitely blowout earnings. Remember, we search for that growth. Always investors, shareholders, they're always looking for the growth. Once they see that the company's actually showing growth, that definitely will make investors more confident to buy more stock, to feel more confident about the investors. To feel more confident about the CEO, the management decisions, the board of directors, and things like that. But we see Netflix is definitely headed to that $200 level. Remember, 150 was definitely the $30 increment that we do use. Excuse me, we go 150, we are 180 now. From 180 we're going to go to 210 now. Of course, Netflix will come back down below this 180 level, but once it does go below that 180 level, this will definitely be an interesting point for you guys to go ahead and scoop up a really good position in Netflix. So if you're a long-term investor, you can buy some, you can buy some right here, right now. Or, if you're looking for long-term, looking for a really good price, you could wait, a while until those people come down off of those huge buys that were happening. Because once you do get a quarter that, produces a lot of good beats, there's going to be a lot of people buying on the open because they don't want to miss out on the jump. They don't want to miss out on the growth stories such as, like they reported in the quarter. So of course the stock will jump high because you did receive a lot of buy orders on their earnings call. And we see right here up to 40 million shares were exchanged, just off their earnings call. So when you have 40 million buys coming in, no sales, of course the stocks, the stock chart will gap up. 187 being the all-time high. Of course, we will feel these gaps, which will probably make us to be like a $20 fall. Or if we go right here, maybe just about 16 $20 fall, 16 to $20 fall right here, and that'll probably get us off of that overbought level to where we're oversold. And if we can find an oversold level at 160, around the 160s, we're definitely going to explode higher. But remember, stocks cannot keep running up, every single time. But this is definitely a bullish call from Netflix, showing us that they are still growing subscribers, because that was, a huge problem for them. Remember, there weren't, subscribers, there weren't subscriber growth, excuse me. And we have to pay attention to every single earnings call that comes out that presents growth in its story. So let's go over the portfolio one more time. We see that, the triple Qs right here. 112 is definitely, we're coming back up to that high point. Let's go back here. You go to the triple Q. 112 is definitely breaking out, or, we're having some sort of a breakout. Let's go ahead and zoom in on that. We have like a slight breakout. 112.21 was definitely the all-time high for the stock. Just about, 112.21 was definitely the all-time high. Let me go ahead and get the drawing correct. Drawing tools. We're going to use a price level, and if the computer, okay, the price level, and that just pretty much helps you set, supports and tops. So we see, all-time high being reached right here, and then it definitely comes back down. We have a little resting period right there, and then after a while, we're going to explode and break out. And that, we'll see a breakout pattern happening for the NASDAQ once again, like we see year in, year out. We see to go back to the triple Q. I'm pretty sure it follows the same pattern. NASDAQ is definitely breaking out, or the ETF, so to say, is actually breaking out, because it is following the NASDAQ within lockstep of each game. So we see the Dow Jones definitely, getting ready to break out. It's, kind of slowly grinding higher here. I would say 21,600 and maybe 21,600 and something is definitely the all-time high for the Dow Jones. But we keep seeing that, stocks are definitely pushing higher because of earnings and anticipation of good growth that some of these companies are going to report. Remember, these stocks are going to keep pushing higher every time they report a good quarter. If nothing, if nothing is wrong and everything beats expectations, and there's nothing to, worry about, and they issue out a good guidance outlook for the year and the next years to come, of you definitely see that these stocks run higher. CSX wasn't, it didn't really deliver a really good earnings call, and as you see right here, shareholders were not happy with that. And as we see, we broke the daily moving average, going down to $51. Now, this could be, a buying price for some people if you believe that, this stock will definitely rebound. But remember, 50, when we do these $5 increments, 50 will be support. If we get to this 51 level, this will probably be, prices for you to dibble and dab in, definitely pick up a small position. But definitely when it does move lower, we definitely want to find a position, to keep buying more. And that way, once it starts climbing back up, you'll know that, you start receiving, bigger gains. But, as we see right here, shareholders were just not happy with it. You can see, shareholders were really happy with this call right here, which made it gap up, and you see the dividend made shareholders really happy. Shareholders have been happy, throughout the holding of the company. But as we see right here, dividend increases, which is a big plus for all the shareholders who want to hold long term. This stock chart is showing a huge plus. We're up about 100% since that low in 2016. And if we can go back 3 years from now, we see that the company started off with some good growth in this, in the share price, started to go down, and it looks like a wave sort of now. So we see $16. 16 cents dividend was declared on 2014. Now we're in 2017, and now we're starting to see 20 cents a share dividend. So that lets us know that the growth is there for shareholders. So if you are a shareholder in this company, they definitely are rewarding you for holding the company's stock or holding a piece of that company. And you are being rewarded handsomely if you're holding the company's stock. And let's go ahead and check out Square. I know Square hasn't reported yet, but we see the demand for Square shares is still ripping higher. Remember, $8 was definitely the low, and we get all the way down here to where it's below $10. And as you see right here, the stock, it continues to go higher. I put out this, resistance line because I thought, to have trouble right here. But next, the next line I have to plot out right here would be $30, because we see that 25 was definitely not a challenge. 25 was definitely not a challenge, but as we see right here, let's go back. I guess a month or so. So we see the move past, the breakers past $20. Now this move is anticipated on, you see right here breaking to this 20 to 25, and once we pass 25, we see this huge gap up. And if we get to $30, it's going to be like a Twilio situation. We're going to move higher on anticipation that good growth is there. So if good growth is not there for this company, the stock price will definitely retrace and go back to where it was at before the earnings call was right here on May the 1st. So if the stock does not do well, we might see stock levels retrace. 25 will not be the support level for this stock if it if it continues to go up. And once once it's time to take a look at what the company's done so far, and they're not able to show growth, that's going to be the negative sign for the stock to go lower. I'm not sure how low it goes, but I'm pretty sure around $20 it will definitely be the support level, to see where the stock goes. So let's also take a look at my holding so far. So Apple, we're up about $2,100 on Apple. We keep going higher every single day because remember, I said the bottom in Apple was here. Remember, Nasdaq did go on a huge slide. Now on that huge slide, that was your chance to pick up those big names that were overbought. A couple months ago, remember I kept saying the stocks are overbought. This and that is overbought. This and that is overbought. Now, when we got an oversold signal from the Nasdaq, stocks actually came down. So the people who were holding all those gains at that overbought level, they decided to sell. So that's why you see the onslaught of selling. And that was your time to buy. It took about 3 days for the stocks to bottom out. That's typically how it happens. It takes about 3 days, and after that, the stocks continue to run up. Remember, when you find growth names and they sell off, and that's pretty much in this Jim Cramer's Get Rich Carefully book. Like he said, when you see people on the news talking about raising money, or it's time to get defensive, that's simply your time to actually buy the names because the bottom is there for the stocks. And that's typically the approach that I have right here. I know it might have been a couple dollars short. I'm not sure if I'm able to look at the market I was able to buy at, but I wanted to show you guys exactly how to make money every single time. You want to be perfect in picking the price, but sometimes you're not perfect every single time, but you want to make sure that you're getting in at a discount price. And how to identify the discount price is that the stock is steady hitting all-time highs, and the stock goes down $10 to $15, maybe $20 below that all-time high. We want to check in on why that stock has fallen so much off of the all-time high, and then if it's if it's nothing to to be concerned about, we go ahead and buy that stock. And that's typically what I did here with Apple. So we're up about $2,100 on Apple. Our portfolio is still recovering. Remember, we were down. Our portfolio gains were cut in half, so to say. We were up about our portfolio value was up to $219,000. But I'm pretty sure if I sell maybe a couple of these stocks on on the whiff of a negative or negative news and get in another name, opportunity will present itself at one point. So at any point, these stocks are not for me to hold long term, but like I said, I want to show you guys exactly how it feels to hold a stock long term. We see Berkshire Hathaway. We see me taking a huge loss of with Berkshire Hathaway. What I did was I really didn't care. I held out. Remember, when you see stocks or when you see the major indexes, like the Nasdaq, the Dow Jones, S&P 500, when you see those things stay down just about for a week or longer, remember those are temporary moves. Remember, there are 52 weeks in a year, so if you see stocks down 1 week out of the year, that really doesn't mean nothing, because after a while, the stock will continue to rise, especially if there's growth in those names, and especially if they keep beating earnings. So remember, we want to listen to the earnings calls. We want to hear, we want to hear positivity. We want to hear excitement. We don't want to hear that, we came in, short of, estimates and this and that. But I think I might sell my Take Two shares because I really think this, this stock has definitely moved. Some of the moves haven't been justified for me. Remember, we seen 75 from 75 and went to 80. That was definitely a move that you would see on earnings. Remember, the stock fell all the way down to $60 and ran back up to 75. Now with that $75 move, I can show you guys with the chart. Let's go to Take Two Interactive. We see right here. Where is it at? Okay. So we see the huge gap up, not the huge gap, but the huge large bar up, and that followed by a gap. Where's the gap? Okay, so there was a gap. If you definitely go back in my old videos, there was definitely a gap in this stock chart. So I know I'm not tripping, but there was definitely a gap right in here when the stock did fall back down, and it rose up on really good expectations that Red Dead Redemption will be a hit next year in the spring. So remember, sometimes stocks do move off anticipations of next year's estimates or next year's gains. Remember, a stock can report, or a company can report negative earnings, but if they say, okay, next year we're going to be really optimistic and we can, our projections show that we're going to have really good growth, you might see the stock down tick, but after a while, the next day, you might see the stock move back up because of anticipation that the stock or the company will do better, over time. So remember, don't get confused with these short-term moves. Let's see what else reports. Let's see American Express. American Express definitely reports, and we see that shareholders have been rewarded all throughout the years of holding. But we see that the stock is definitely taking a hit, from not an all-time high, but 94.89, just about 50%, from 94.89, and then we took a huge dip, and we're rising back up to those levels. Now let's see if we can find a gap, or we can find where the stock should struggle at. So we see around this level where we have this huge bar up. About 86 will definitely be the top. So remember, when stocks move, they move off these increments, and they might move 5 to 10 to 15, maybe even 20, depending on the stock size or the share size. Remember, when the stock does report, and they do report a good quarter, if the stock is maybe $100 stock, maybe the stock moves up $10, maybe the stock moves up $20. Depending on how good the company reports, you will always see the shareholder vote with their shares. Remember, if it's a negative impact, the shareholders are voting something that they really don't like, and they're starting to get out of the stock. But if the company is reporting good, good earnings, good everything, the shareholders will vote that stock up. And that's typically how the stock market works. We want to invest in growth. We don't want to invest in any stagnant companies that don't present in growth, for our pockets, for our, our savings. Remember, there's a financial freedom for us, when we do invest in stocks. So let's also look at Honeywell. Honeywell will definitely be an interesting one. Remember, we really didn't buy that many shares of Honeywell. No, that's Clorox, excuse me. But remember, Honeywell was definitely, a stock that I definitely thought was going to come back down pat or below that 130 level. But as we see, stocks kept running higher and higher. Remember, stocks were at that overbought level for the longest. Honeywell was one of them. But for some reason, Honeywell decided to wash out all of the buyers. So check this chart out. Honeywell was definitely overbought for a while, or if you look at it from a 3 years perspective, it's definitely overbought. But if you look at it, it was definitely overbought at this level. But after a while, shareholders were, kind of not really moving the stock up a little bit. As we see, the stock is kind of nudging up, slightly because, a lot of people are buying and selling, and there's really not any news moving the company stock. We're kind of just trending up, just like the Dow Jones, or I'm pretty sure this might be a Dow Jones. This might be Dow Jones stock. So let's check out the monitor here. We can definitely check out Twilio. Now, Twilio definitely hit $30. Twilio is now at $31. Now, on expectation of earnings, remember, this is what I'm talking about. On expectations of earnings, Twilio has tried to break out past $35 for the longest. Now we're leading up to that moment once again. Twilio is now getting close to $35. We're $4 or $4 away from breaking or hitting that $35 ceiling. Now, if the company does not report a good quarter, I'm pretty sure this thing goes below $20, or it might have a huge impact on the share price. Remember, we have to pay attention to the way the stock patterns are showing us. The stock is up 3% today, but remember, we were in for this ride all the way up to $30. We will be able to get out at around, somewhere around this $20, $29 level, but we see the stock continue to go higher. We don't want to be in a stock, if it's if it's tried 35 for the longest, it's tried it right here, right there, and look to try it once again. So four times the stock might try 35. So what that lets us know is that shareholders are very optimistic that at some point the stock or the company will definitely do better over time. Now, this earnings call is definitely writing up on everything to see if the stock will definitely break out past the $35 level. Who knows how long it may take for the stock to get back down or get back to the $35 level if it does report bad earnings. But as we see, it every single earnings time, it runs back up to the $35 level. It waits to see if the company is going to produce. If the company does produce, and it's happened 2 times already, the company has not produced what shareholders were expecting. And the fourth time, I'm not sure how they will sit well with shareholders. I'm really not sure. But we definitely have to keep watching out for Twilio, because remember, from my portfolio, we did have shares in the stock. Remember, the CEO was able to find a bottom at 22. Remember, the CEO, CFO kept buying shares, and that typically lets us know that something positive might be happening for Twilio of the earnings call. Remember, whenever you see CEOs start to buy shares of this company, that may signal for some people that that they might see the stock at a discount. Something might be brewing up on the next earnings call. Something big might be happening. So remember, the CEO wouldn't necessarily put his money at risk if he knows that the company's definitely going to do better. But if if he's seeing growth, if he's seeing his stock at a discount, that's definitely a time for you to go ahead and step up with him and start to buy stocks, or with her to buy stocks. So what else can we look at? The IWM, Russell 2000, we see it's breaking out. All the major indexes are breaking out just about, or getting close to breaking out. And we see the S&P. What we have seen, which is very interesting for me, we see a split with the direction shares of the XPXL. And this is the 3 times leverage on the S&P 500. So if you wanted to, feel a little risky here, and you wanted to invest in the S&P, but you say, okay, I want my shares to move faster than the S&P does. This is definitely one way to do it. Remember, the S&P will go up no matter what. I really don't see this as losing money like a lot of people do, because they say, the ETF does reset every day, but that's completely retarded, because if you look at the stock chart, for both of these stocks, they are both the same way. They both follow the same pattern. So let's definitely take a look at that. Let me see if I can pull up the Yahoo Finance. And let's see if we can actually get that on there, because these stocks, a lot of people, they would advise you not to invest in these leverage ETFs, but when you really do think about it, they move in the same pattern. They move in the same exact pattern. I know the hits and the gains will be amplified, but they move in the same exact pattern. There's really nothing to be scared about. When you do invest, or when you do trade these. When you do invest, and when you put your money at risk with these leverage ETFs. Let's see if we can get this thing loaded here. So Amazon definitely hitting all-time highs. Let's go ahead and check that out while the thing's loading up. Sorry, the computer's low. But we see Amazon definitely moving higher. NASDAQ moving higher. Take-Two Interactive moving higher. I'm pretty sure EA Sports moving higher. Activision, Blizzard, down a little bit here. But they're having problems with what I think was the E-League. I see news on the E-League, and they might be having problems with that, or, being able to make money on on one game. I'm not really sure if it was I'm not sure it was some other game, but I'm really for certain that it was not Call of Duty. So there was some game with them and the Patriots owner Robert Kraft they're trying to invest in. Let's see if we can get here. What is it? The S&P. Okay, finance. And make sure you guys are, definitely seeing what I'm seeing here. Okay, so this is how easy it is to definitely, follow stocks. U.S. market closes in 51 minutes. So we see nothing but green from all indexes. That lets us know that, it's very good. And we see the NASDAQ is about to hit another all-time high. That is a really big plus. And I'm pretty sure the contributor to that was Netflix, or some other companies, because I do see a lot of companies that are up today. Just a sea of green. We see gold definitely down, but that is expected from gold. Remember, gold is definitely a safety trade. Bonds are a safety trade. So when you start talking about stocks and bonds, we want to leave the bond part out of it, and we want to just talk about stocks. So let's definitely dive into comparing the S&P with the with its ETF, and also with this leverage with this leverage ETF. So hopefully, if this thing can load, it's moving very slow. So we can go to the full screen. The S&P isn't, the S&P, NASDAQ, they really aren't up that much, as we see right here, Dow 30. These are the 30, the 30 major held companies. Remember, when you say Dow 30, that's just the major held companies. That is the Dow Jones Industrial. But those are just the 30 major held companies that do compile the Dow Jones. And the same thing comes with the S&P 500, Standards and Poor's 500 companies. And those companies do get changed out, I think, every year. If they do not present growth, of their guidelines are met, the company does switch out, or whoever's in charge of switching out the companies, they do switch them out. Because I'm pretty sure, I think some companies were added, some companies were left out not too long ago. And this is what keeps the NASDAQ. This is what keeps the index from going higher. So we go ahead and go to compare. This is definitely accessible by from anybody else. We go to the actual ETF that follows the S&P 500 moves, which is SPY, SPY. If it can actually go, I'm not sure what's going on here. Okay, so we have the SPY. Remember, SPY and the S&P 500. Remember, they move in lockstep. So we see that both the blue and the green line are both moving the same way. And let's go ahead and add the XPXL. This is the leverage return for the S&P 500. They move in the same pattern. What in the world? Oh, okay. So there was a reverse split. So of course it's not going to move in the same pattern, but there was definitely a reverse split, or not a reverse split, but there was a split with the companies. Let's see if I can actually get it right here. Let me show you guys right here. SPXL. Remember the pattern? We have the pattern right here. Let's see if we can actually add stocks. Quick study. Compare with the S&P 500. Okay, there we go. This is a much easier way. So as we see right here, moving in the same pattern. So remember, we have the S&P 500. Remember, S&P 500, which is 2471 today, and we have the S&P 500 times 3. And remember, these are measured. This is kind of like comparing, contrasting the patterns. So we see that they move in the same exact lockstep they are moving in. There's nothing really changing here. So with that being said, guys, that's all I have for you. If you want me to take a look at other things, we can also do that. We can add the Dow Jones Industrial in here. We can add the SPX. Okay, we can add SPX. Okay, so that's all I have for you guys. If you have any questions, remember, put them in my comments, so that way I can definitely take a look at them. Or if you have something for me to invest in, if you don't agree with the investments that I do hold, definitely comment that at the bottom. Remember, all my companies are definitely heading into earnings. The conference calls are definitely coming up. If you guys definitely have a problem with me holding any companies, you plead your case for me to definitely buy some other companies, definitely let me know, so I can definitely take a look at the company, and we can actually go over exactly why I should invest or why I shouldn't invest. But right now, our investments are definitely building up a pretty good head of steam. We have Take-Two Interactive, Video Game Maker. We're almost up $2,000 on it. The Triple Q's Leverage, we're up about $2,500 on that. Now we go right here, the SPU. Remember, these are for the penny stock people that remember that thing. Penny stocks are definitely a really good investment. These are for the these are for the people that think penny stocks are definitely a good investment. The Starbucks investment, this is definitely a stock that I do hold, primarily in my personal account. The PLX, this is definitely for those people that do hold penny stocks that think they are investable. Honeywell, definitely an investment that I really have to make towards the end of the year. We're up almost $1,200 on that. HIPA. Remember, this is for the penny stock investors, specifically the 000 investors that think that 0001 to 0002 would definitely give you some really good money. We see that the company stock is really not it really hasn't broken out, basically because there are no promotions going on. And I made sure that I bought these stocks. These stocks were not random. All of these stocks have something in common, that they were all promoted. So I wanted to make sure that I bought the promoted stocks, so that way we can see exactly where they would go over time. And Home Depot, definitely a stock that I'm going to keep holding long term. We might exit out of this trade, but as we see, Home Depot is definitely rebounding. And 160 might be our price target to actually, dump the stock out and maybe trade for something, better. But right now, Home Depot is definitely recovering. Clorox, we don't have that many shares, about 5 shares in Clorox. Right now, Chesapeake still down on us right now. We might go ahead and eliminate the trade next time. Berkshire Hathaway, we're up about $1,600 on that. Apple, we're up about, $2,100 on that. So remember, the gains come when you pick the growth companies. Remember that all the time. Gains come when you pick growth companies. They will never go away. The gains will come when you pick the growth companies. Shareholders value growth. They will always keep flocking to growth. Once you remove the growth out of the picture, that's when shareholders, and that's where a lot of shares will start to leave out of the door. And really, your company will be irrelevant to other companies that are actually showing growth, that are actually presenting, opportunities for shareholders to capitalize on them. So that's all I have for you guys. Take care.